Hi, let's talk about Micron technology. It's quite a big company, almost 100 billion of market cap. It's a company that designs, manufactures and sells memory and storage products worldwide. So it's in the industry semiconductors, and P ratio is 29, is below the semiconductors industry, an average of 34. Earnings are forecasted to grow over 23% per year. Earnings have grown 11% per year over the past 5 years. Snowflake is also better, as usually from the companies that I do research. And Simple Wall Street finds only one risk: it's significant insider selling over the past 3 months. So latest news, latest share price. It did some of the drop since it had the peak on the mid of April, but they have some of the debt financing since there they entered the index. They had some of the product updates and so on. Market performance, 1-year return 70%, and this is actually very good long-term story as well. So 5-year return, we see here 600%. And yeah, of course, those numbers are beating the industry and the market. Long-term price volatility considered as a little bit higher than the industry itself, but still not on the highest level. Valuation side, so based on Simple Wall Street, it is overvaluated. Fair valuation should be around $55. TipRanks has different stock price target. 111, 118, sorry. The highest in good scenario is $165 per share. So in 12-month forecast, 165. I think, yeah, pretty much the market watch has similar stock price targets. In good scenarios, $172, low scenarios, 90. So even in low scenarios, it is upside based on market watch. Average 120. And the future growth, as I said, over 23% annually. And so we have here the forecast. So it's profitable company, which is very, very nice. Earnings per share are forecasted as well as to grow. Past performance, so historical annual earning growth increased by 11%. It's pretty. They have this volatile year, so they had actually earnings on the negative side only like for a half year. They have high quality earnings and financial health side. Yeah, so they do have a lot of equity, 40 billion, 7 billion of cash, and debt 6 billion. So this is actually a very good situation where the cash level is covering the debt. Debt to equity ratio is 15%, considered as satisfactory. So balance sheet looks pretty green. They have this 6 billion of debt, and they have actually the dividends forecast. Dividend yield is 0.22%, and yeah, I think it's forecasted to pay on end of August this year. And there's also forecasted the dividend yield should raise. It's analyst forecasted that it could be 0.4%. Future payout to shareholders 2% in the 2024. But we'll be back in the Simple Safe dividends, because I'm not sure is it their first dividend pay. On the ownership yeah, we do have, see here, individual selling, and pretty massively. I could say that February, May, January, and last August. So one person there sold yeah, over 8 million, 8.5 million. Ownership breakdown: institutions holding 83%, general public 16, insiders 0.2, state and government 0.04, public companies less than 0.0%. It's not actually less, it's 0.0003. Top shareholders: BlackRock increased. Do we see here Vanguard Group? Actually, it's not here. So we see here on both sides, JP Morgan increased 35%, JP Morgan 8%. Yeah, so there's on both sides. But anyway, we see this short-term downtrend. So there's the line, bottom line. If it drops less than 75, there could be big correction coming, but there's multiple tops, so I think it could run in this tunnel, so $75 per share and up to $95 per share. Simple Safe dividend shows that shares outstanding are pretty volatile, so they had these years where shares outstanding were less than 1 billion, but currently 1.14. It's pretty average long term. Total sales are volatile as well, but long term we see here that it's increasing. And if we open up, for example, 1 year frame, so they're up to 61%. And if we open 5 years, 540%, and max over 5,000%. So that's actually the power of long term. But those who invested, for example, here, yeah, they actually managed now 1.3 on the negative side. Those who invested, for example, in 2012, 1,500%, huge returns. Even those who invested in December 2014, they are, actually in 2.5 years, minus 70%. And then they had to wait. How much they had to wait? 3 years for the positive return. They would be now like 143% up. Anyway, investing.com, summary of the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.